Thank you for joining us today at our session on ethical crowdfunding, the road to financial inclusivity. My name is Victor Ng. I'm the Chief Commercial and Strategy Officer at Fundnel, and I'm happy to bring today's guest to you, Mr. Umar Munshi. Umar is a social entrepreneur. Since the age of 18, he has experiences in health tech, Islamic finance, and education, and has worked from Singapore to Saudi Arabia with a long stint in Indonesia in a partnership with Ronald Wijaya as his co-founder, and now is based in Kuala Lumpur. Umar is also CEO of Global Sadaqah and is well connected to the fintech world as chairman of the Islamic Finance Alliance and a member of the Fintech Association of Malaysia. Thank you, Umar, for joining us today. We're going to do this in a very simple format. What I'll do is I'll start off with a couple of questions for Umar, and then we'll turn the floor over to the Q&A session and in the later segment of this webinar. Umar, how are you today?
I'm good, Victor. Thank you for having me. Thank you so much, for the webinar and for all the participants, and for Fundnel, of course, for organizing everything.
Yeah. Well, as I shared with you earlier, I mean, this topic on ethical crowdfunding and Islamic finance is close to my heart. I first worked on this issue about 18 years ago when I worked for a government organization doing some research in this area. And it's been a journey for me to see how the industry has developed or not developed in this space. And I'm curious to hear your thoughts about this today. But let's start off with some basic questions for some members of the audience who might not be very familiar with this topic.
Sure.
So what is Islamic finance, and what are some of the most common misconceptions about it?
All right. Now, I mean, definitely this question is a heavy one because there's a full degree course and master's course and PhD courses for Islamic finance. But what I'll do is I'll try to break it down in a way that can be more relatable. So essentially, Islamic finance can be seen as a form of ethical finance, or ESG finance, or impact investment in that sense. Yeah. So it's a subset with some unique characteristics or unique principles, which are then implemented in certain models within the current modern financial landscape. So maybe I'll highlight a few of the key components or key aspects of this framework, which is Islamic finance. So first of all, the logic behind it and the approach to Islamic finance is not something that sort of was created from it's derived actually from religious sources in Islam, which is the Holy Quran, our holy book, and also references and stories from the Prophet and other stories as well from scholars in the religion. So this is one thing that I want to highlight. And before I go on to the principles of Islamic finance, which are fundamentally ethical, universal ethical principles, I want to touch on this first point first, because that's essentially what makes it different for good or for bad, right? In the sense that sometimes the term Islamic, the label Islamic, can confuse or scare off people even, and sometimes non-Muslims would think that it's not for them. Yeah. So I want to touch on this point quickly, and one way I can relate to this is probably halal food. Like everyone can eat halal food. McDonald's is halal. Subway is halal in Singapore. So what's halal is a specific way of preparing food, and some limitations on ingredients and so on. Yeah, so it is also in a form of a kind of an ethical framework. Yeah. So similarly, when applied to finance, there are these unique principles that Islamic finance needs to adhere to. Yeah. So I'll touch on a few of these things, and I think the most basic fundamental principle underlying everything in Islamic finance is that it is meant to espouse justice, to protect justice, and to circulate just or fair finance in society. And of course, it's a very abstract concept. What's justice, and what's just, and what's fair and what's not. And how Islamic finance does it is through a combination of the more common factors that are relevant to today's world would be, firstly, that money is not accepted as a way, a form of, or in other words, money is not accepted as something you can use to make more money. Meaning you're not supposed to lend money and basically charge interest. Because when you just lend and you charge interest, in that sense, you're just making money from money, right? So you can invest, but when you invest, it needs to be more participatory, meaning it needs to go into the business, and whatever benefit or profit that you get is from the business activity through profit sharing typically, and or through trading. That's another very common method that's of course acceptable. You use your money to buy and sell, and you make profits from there. And lastly, from rental. Yeah, so you have an asset and you make money. You buy an asset and you make money from the asset. So in all these three examples that I gave, there is that underlying business activity, as compared to just lending money based on, let's say, just credit worthiness and so on, where there's no underlying activity that generates income. Yeah. So this is something, before I wrap up on this point and go on to the misconceptions part. In today's context of pandemic ravaged world, the economy is in its doldrums right now. A lot of people are unemployed and having problems. Yet we see the financial economy moving in its own direction. Right? We see how the financialization of the economy has today reached a point where we can see that it is separate from what's really happening in the economy. So this is part of why Islamic finance, I feel, and a lot of people feel, can be a viable solution, because it pushes funds to the real economy, not to the financial economy, for example. Yeah. So about misconceptions, right? I think you asked about misconceptions. So probably I touched on it briefly. Feel free to interrupt, Victor, anytime. Yeah.
Sure. Yeah.
Yeah. So I did briefly touch on this. I guess a misconception is that it's only for Muslims, especially in Muslim minority countries, or where Islamic finance is not so prevalent. One interesting statistic is that in Malaysia, when you look at the Islamic deposits in the Islamic banks or in the Islamic accounts of banks that have that, it turns out that more than half of the deposit comes from non-Muslims in Malaysia, because the understanding and appreciation of Islamic finance here is best in the world at this point. Yeah. So that's the first thing I want to highlight, that Islamic finance is for everyone. Of course, it's based on Islam. Yeah, but just as halal food is also something delicious that you can eat, it's the same thing. Yeah. I guess the other misconception is that it's complicated. So I would say this is maybe a misconception in the sense that the underlying basis of it is not complicated. What complicates matters is when we try to fit in the framework that is fixed into a modern context where it may not be applicable. Then there comes a lot of maybe confusing structuring that needs to be done. And then it becomes a bit more complicated. Yeah.
Could you elaborate a little bit more on that last point that you mentioned? Like, what do you mean by kind of fitting the concepts into a more modern framework?
So I guess the most common application that poses a challenge to Islamic finance is consumer lending. Because as I mentioned earlier, in Islamic finance, you're not supposed to lend money to make interest out of that money with no underlying activity that generates profits and income. So when you lend money to someone, it's not tied to that person's life or work or activity, right? It's just lending money. So how do Islamic banks do that? Right? So here's where they have to be, to a large extent, yeah, a lot of the banks, not all the banks, need to be creative about it. And sometimes for some banks, they have a safekeeping fee, right? That means we're not actually making money from your money, and we're not giving you money from that. We are charging a fee to safekeep your money. So it's considered a service. Yeah, so that becomes a little bit more allowed or more acceptable. And sometimes banks have a transaction in between where commodities are bought and sold instantaneously at a markup, and that markup is the source of the additional amount that becomes typically the interest, but in this case it's considered a profit. Yeah, so these are certain creative ways to go around while around the principles, yet trying to adhere to it. Yeah, and that's why it becomes a bit complicated sometimes.
That actually brings me very well into my next question, right? Which is what makes an investment, right, Sharia compliant, and what makes it kind of ethical, sustainable, and socially responsible?
Sure, thank you. So as I mentioned earlier, Islamic finance is based on universal ethical principles. Of course, you may not agree with everything in Islamic finance based on your own perspective and reasons for looking at what's ethical and what's not. Yeah. And so to answer your question, I think very, very key component is firstly, not to have any clear-cut elements of things that are disallowed. Yeah, and that essentially is divided into two parts. So one part will be the nature of the activity or the business. Yeah, so sectors or so-called vice sectors are not, cannot be considered, cannot be part of the transaction. Yeah, so that includes from gambling to, of course, things like pornography, even weapons and so on. Yeah, so that's a very important aspect of it. And the tricky part comes when the investment or let's say a fund is investing in financial institutions or even fintech. Because if those fintech or financial institutions are not following Islamic principles, then that investment itself or that business, that company becomes non-compliant. Yeah, so that's where it becomes more of an issue, because I don't think anybody wants to invest in pornography anyway, right? So, yeah, so that's one aspect of it. Now the other aspect that's very important, and I'll not use the Arabic terms. I think what's important is the substance or the reasons behind these terms, right? So yeah, and these Arabic terms I just want to highlight about this is, in my opinion, is more of a legacy thing where it started in that way and it continues to be used in that way, and it helps to define or identify certain things as well. Yeah. So back to what's ethical, sustainable, and Sharia compliant. So the other component is that the transaction itself needs to be clear and not have ambiguity. That is a very key pillar of Islamic finance. The transaction, the relationship, the rights of the parties need to be clearly stated. So that's very important. And the third one is the element of speculation, which is equated to or akin to gambling, which is not allowed in Islam. Yeah. So here also there are gray areas and gray lines. Yeah. For example, the issue of investing in cryptocurrencies or crypto assets. A lot of the major Islamic finance scholars have said that it's permissible because there's nothing haram or wrong or non-compliant about it. But the thing is, a lot of people do it in a very speculative manner. So then, other scholars believe that it's not to be encouraged or even disallowed. Yeah. So these are the three elements, right? No element of direct interest or making money from money. Secondly, transparency and clarity. And thirdly, the aspect of gambling, must be avoided as well. And to go deeper into the ethical and sustainable component, I think the broad point is not to cause harm to individuals, society, and the economy, the ecology, the environment. Yeah. So this is very important. Not to create harm, not to cause any form of injustice or have any negative repercussions. One area that I think Islamic finance is still catching up on, because when it was formulated in the modern sense, in the modern context, about 30, 40 years ago, global warming wasn't an issue, right? So now increasingly Islamic finance institutions are looking into the environmentally friendly aspect of it, because it was not there at the start. We didn't know that burning coal was bad, right? Yeah, so that's why what's important is the underlying principle, and then the implication of it, of course, does evolve based on how the world moves. Yeah.
That's so interesting, because as you describe it, I'm just thinking that, all these principles really have that foresight, right? Because today we are talking about ESG investments as a big thing, but actually the framework for that has more or less been set out in Islamic finance. I mean, in modern days, decades ago, it's actually longer. Yeah.
Sorry, thousands of years ago. So
exactly.
one thing I wanted to share which is more for social finance, is the concept of endowment and trust, right? The British trust law, which is the basis of most of the trust and endowment acts around the world, was actually derived from a concept in Islamic finance called wakaf, which today, of course, translates back to endowment. Yeah. So this concept of an institution that is set up to safeguard some assets for specific social beneficial use, that was actually something that existed in Islam 1,500 years ago, and even before that, although it was not termed in that way. Yeah, like when you see Muslims going to Mecca doing the pilgrimage, and you see the big black box, the Kaaba. So that's also considered a wakaf, an endowment. It's an endowment for the Muslim world. Yeah, from long time ago. So that concept today has I mean, not today, I guess a century ago, manifests in the British trust law. And today, endowments is such a powerful concept, funding big universities and many other things. Yeah, so this is something I wanted to share.
Oh, thank you. Well, that's two interesting things I've learned already. I've never thought about Islamic finance and cryptocurrencies, but very interesting. We might talk about that a bit more later on. But going along those lines, as we're talking about ESG, right? So sometimes when investors look at ESG type of investments, they always wonder whether that means that they have to take less profits, right? So are Shariah-compliant investments less profitable than conventional financial instruments?
I mean, based on data, it's not based on data, yeah? Maybe I'll share a link of a very recent paper that was published in the chat. Yeah, so let me just quickly share it here. Yeah. It's okay, right?
Yeah, of course. Yeah, that's cool actually.
All right. So this was a recent research paper that was undertaken that talks about modern portfolio theory in the Islamic perspective or Sharia perspective, and it found that Islamic finance is very competitive and essentially providing better returns. Of course, this depends a lot on which period you look at and many other factors. Yeah, but essentially, if the underlying principles of what I shared earlier are adhered to, then you are investing in businesses and companies that are fundamentally more resilient. And in the long run, that definitely makes for a big plus point when it comes to investing. Yeah. In the immediate term, maybe there are certain industries that are very high profit that Islamic finance is not able to go into. I mean, for example, alcohol, right? Alcohol is big business, but Islamic fund managers and Islamic investors cannot go into that. So that, I guess, does have an impact on our returns. Yeah, it limits our returns. Yeah, but I mean, for example, you look at technology stocks, Apple, Google, they're all Sharia compliant. So in general, I would say no, it does not result in lower returns. It potentially results in higher returns. There's some evidence that I just shared just now. And my view is when you invest, it's a combination of the numbers and also the human factor, right? I mean, it's our money. We want to do something with it. We want to do something good with it. Yeah. So I think that component, although not directly tied to financial returns, it's also something that's increasingly investors are keen on and looking at. Yeah. So that's where I think Islamic finance can bring value to investors. Yep.
So someone like me who's a non-Muslim, right? What are some of things, maybe the top 3 things that I should know if I want to participate in Islamic crowdfunding?
Sure. So I mean, in the sphere of crowdfunding, there are different platforms doing different things, Islamic or conventional. And I guess what's very important is the platform itself, right? Whether you are aligned with that platform and you like the platform's activity and track record and management and so on. Now, in Islamic finance, in Islamic crowdfunding, there are not too many big players yet. When we started back in 2014 in a slightly different form in Singapore, we turned out accidentally to be one of the first in the world. And at that time, we were not aware of that. We were just trying to solve a problem that our community faced in Singapore. And Islamic finance has taken some time to really catch on to fintech and crowdfunding. Yeah, and I would say mainly it's because Islamic finance has grown large in banking and fund management. Yeah, not so much on other areas, right? So anyway, I think something to consider. Firstly, of course, like any other investment opportunity, look at who you're investing with, which platform, and what they're doing. Yeah, and when it comes to Islamic crowdfunding, what's important is how it's also structured, in the sense that who's supporting the company or providing services to the company for the Sharia compliance. Yeah, so there are reputable Sharia advisory firms and so on. And for us, we engage one of the top organizations here in Malaysia called ISRA Consultancy, International Sharia Research Academy, which is affiliated to Bank Negara Malaysia. So they are very robust in how they screen and they structure the deals together with us. Yeah, so that's very important. Yeah, and something else that I think investors should look at also is, for Islamic crowdfunding, I see the opportunity to be in emerging markets. Right? I mean, Southeast Asia obviously is a very good market. Indonesia as well. Malaysia, there are pockets of very good opportunity also. So when a lot of the emerging world is actually the Muslim world. Yeah. So when the financing or the platform is Islamic, it tends to have more appreciation from stakeholders in that country, as well as from the deals that we are funding. Because sometimes there are very good deals that are only looking for Sharia financing. Yeah, and so we would be able to access to that. Yeah, whereas a platform that does not offer Sharia or Islamic services may not be able to access those kind of deals. Yeah, so there's a few things maybe I want to share about choosing or going into Islamic crowdfunding. And for us, we have been in Indonesia for a long time. Recently, we got the license, and right now we're scaling up, and activity is very, very dynamic. In Malaysia, we just launched our equity crowdfunding platform. So that too has seen a lot of very interesting deal flow. So yeah, Islamic crowdfunding, I think, is very much on the upswing. Although it started late, right now globally, there are close to 50 around there platforms. If you consider Indonesia, there are about 15, 20 platforms already. Yeah.
Interesting. From the business point of view, right? The business owner's point of view, how should they decide, right? What do they stand to gain from, let's say, choosing to raise funds through Islamic financial instruments rather than conventional, market kind of instruments?
Sure.
How should they think about this?
Yeah, I think it goes back to something I mentioned earlier, which is the type of activities that we can do in Islamic finance, which is trading, participatory financing, profit sharing. Yeah, the second one, and income from assets rental. Yeah, so for a business that has these specific needs, it would probably bring them a lot of benefit to go through Islamic financing as compared to basically typically taking a loan. Because when it comes to the first one, participatory financing, where you have a profit sharing and loss sharing model, then the investor and the business owner or project owner are aligned, right? And they share the upside and they share the risk and the downside as well. So of course, then it goes back to selection and risk mitigation and other things. Yeah, but basically for the project owner or for the business owner, you know that your investors are with you when you succeed, and you're happy to share even more than you would if you were to take financing from the bank. But at the same time, if there are challenges or delays and so on, and the profits are not yet realized, then investors have to also bear that together with the business. Yeah, so for the business, it's not a take this money and whatever happens, you have to give it back to me, I kill you. Like the very punitive kind of lending that a lot of businesses are forced to go to from loan sharks and private borrowing from credit cards and so on. That's not what Islamic finance is, and Islamic finance cannot and should not be doing that. Yeah. So this participatory component, I think, is what I want to highlight that brings benefit to the business owner. The other two forms is very specific activity that is being funded. So for the owner, is tied to a subset of his business or one component of his business, and the investors come in knowing that that is the activity that will bring the profits back to the investors. And so for the business owner, you can sort of ring fence that component with that financing from the Islamic source. Yeah.
I see. Let's maybe zoom out to the more macro level, right? Just to get a sense of the industry itself. How do you estimate, right? Or do you have some data maybe to share about like what are kinds of inflows of capital into Islamic finance? And what does that, what's that split look like between, let's say, Islamic banking versus, other financial services, like what you're doing with Ethis?
All right. Yeah, I mean, Islamic finance has grown by double digits every year. I think in recent years, the growth is still double digits. This is just across the board globally. So it is growing much faster than conventional finance. But at the same time, it is still significantly smaller than the rest of the financial world. Yeah. And when it comes to investments, I would say initially for the past 5 years, for in Islamic fintech, I would say there's a big gap. There is a gap. Definitely, there's a gap because essentially there are few or even no Sharia-compliant VCs, and angel investing is something that's only recently picking up right now, which is very interesting because if you get angel investors from the Middle East, then they are automatically like super angel investors. Like, the ticket is not 10, 20,000, it's 100, 200,000 per startup, from this kind of ultra high net worth individuals. In the past, they would just be LPs or invest in a fund. But right now, there's a lot more awareness that you can go direct, and crowdfunding is one area or one avenue to access all these kind of projects and businesses. So I would say that there is still a lack of funds, but it's growing. And recently, there's some high-profile transactions in Islamic fintech, investments in Islamic fintech, from VCs, mainly from Singapore, investing into Indonesia, and also a few, I think, in the UK. Reputable VCs who go into Islamic fintech because they see the opportunity of the Muslim market and the wider ethical market. Yeah, there's a few, just a couple basically of Islamic fintechs that have raised significant amounts and reached valuations of 100 million and above, and they have managed to raise from very, very significant stakeholders, government-linked companies, not the standard VC types. So that's also a very interesting trend. So yeah, I would say money is starting to flow, and recognition that Islamic fintech has huge potential is also starting to pick up. That's also partly driven by government support and initiatives in Malaysia and parts of the Middle East, and also even in Indonesia. Yeah. So yeah, that's, I don't have data for this right now, but I think this is quite apparent and very observable trend. Yeah.
How do you see the industry shaping up then? Like, will Southeast Asia take more importance compared to the Middle East, or how do you think in the next couple of years this whole industry will shape up?
Yeah, I think it depends a lot on where the industry focuses on, because if the focus is on the wider ethical finance space, then that's already growing in leaps and bounds and is very big in Europe right now. And it's a matter of time before it grows strongly, more strongly in other parts of the world. So if Islamic finance can position itself front and center for ethical investment and ethical finance, then I think there's really a very, very big market. But conversely, if you were to focus more on the so-called natural market of Muslims, it's also a big opportunity. This, by 2030, I think the World Bank says that a quarter of the world will be Muslims. Of course, not all may know or care too much about sticking to their Islamic principles, but there will still be a proportion that will be very strict, which means that they will not be taking part in other kinds of finance and only do Islamic finance, just like how a lot of Muslims only eat halal food. Yeah, so both ways, I think there's a lot of opportunity. Because this large global Muslim population is also the population of the emerging world. Yeah, I mean, Indonesia is just one good example next door. So I think the growth should accelerate. And the last component or last factor that I think will affect this is how fast the industry can embrace fintech. Because the big, I would say, shortcoming or lacking of Islamic finance, notwithstanding all the positives, is that it's not really managed to reach the masses in the developing world. Yeah, because it's quite top heavy. So with fintech, much more nimble. You can go down to the ground and do microfinance, for example, micro investment, micro insurance, micro takaful. So all these micro services are best delivered by fintech. So if fintech can gain more adoption faster, then I think Islamic finance is in a very good position because the models are there to be utilized.
Thank you. I'm conscious of time, so I'm going to start addressing some, I'll open the floor up to audience questions. And before we started this event, I think we had collected some questions from the registration page. So I'm just going to start off with those. But for the audience right now, you can feel free to post any questions that you have for Umar. So one question from the audience is, how does one know if an organization is a good social enterprise worth crowdfunding?
All right. I think the thing about social enterprises is, this is my view, I would categorize them into two types. One where the commercial component is not compromised. In fact, the commercial component is probably very strong or even stronger than their counterparts. They are not trying to be socially responsible. So for that, it really goes back to the how the business model and the social impact is integrated. Okay, so I'm talking about looking at purely from an investment lens, as opposed to social enterprises that just have the social component as an afterthought. For example, I give 5% of my profits to help children, help refugee children, which is great, which is good, but and those kind of companies will call themselves social enterprise as well. So I'm not saying it's bad or anything, but it's like an afterthought. They just decide to do something good with their money, but that does not add resilience or value to society and the economy for that particular business in its business activity. It's just a separate add-on activity. Yeah. So in my opinion, I hope it's not abstract, but what I'm trying to drive at is that social enterprise that is commercially strong should be typically commercially strong because its activity has that social good. So that is a key inherent characteristic of the business. Yeah. So my view is, when you invest in a social enterprise, the social element should be integrated and a key component of that business's drivers. Yeah. Then, of course, there are other kinds of social enterprises where the commercial part may not be so strong, but the social impact is very, very high. So this is more of for impact investors who are looking for mainly impact, not so much on the commercial returns side. Yeah. So for this, typically the challenges would be difficulty in scaling up, partly because of availability of funds, yeah, but also because of the nature of the people they work with. When you work with the bottom of the pyramid, it can be difficult to make things organized, streamlined, and scalable. Yeah, but I also similarly, I'm of course a proponent of technology. With technology, a lot of these problems can be solved. Yeah, we are starting to see how in Islamic finance, sukuk, which is like a bond, micro sukuks are being issued now for microfinance in Indonesia. So that is really something that's not only impactful but also commercially strong and scalable. Yeah, so this is a new phenomenon that we are observing right now.
Thank you. So in the how do we ensure that there is financial inclusiveness without offending Islam?
All right. I think those two are very much aligned. I don't think, maybe the question was wrongly phrased. Yeah, so you won't offend Islam if it's inclusive. It's supposed to be inclusive. Yeah, I think it is part of the framework of being fair and just, or implementing justice in transactions. And a component of that, of course, is inclusivity, right? Not to leave out those in need. Maybe one thing I want to highlight is money or capital is viewed as a form of trust, something that's entrusted to you, which you are answerable for. What do you use this money for? Yeah, so if you just use it, purely on frivolous consumption without investing to help the economy and people around you and businesses and so on, yeah, then that's not too good. Yeah. So if that view is taken by humanity, that money is an entrustment, then I think we will see a lot more ethical practices happening, and a lot more inclusivity as well.
Okay, thank you. The next question we have from the registrations is it possible to raise funds on this platform on Ethis, I suppose, to support the cause of building a mosque in my country?
Sorry, can you repeat the last part?
Is it possible to raise funds on Ethis to support a cause of building a mosque in my country?
Oh, sure. Yeah, thank you. So you can see behind me, we have Ethis and Global Sedekah. So Ethis is the investment platforms, is the brand of the group as well. And Global Sedekah is the charity aspect of the group, the charity platform. So for Ethis, we can fund mosques or parts of a mosque construction and development if there is a commercial component to it, because it's an investment platform. Yeah. So for example, right now we are discussing with a particular party to invest in solar power for a mosque, and the mosque will have savings, and the mosque will then pay some rental to the investors over time. Yeah. Now, but when it comes to pure giving, altruistic, charitable or religious giving, then we do that on Global Sedekah. You go to globalsedekah.com, you can see some mosque campaigns there. Typically, we'll have one or two, and we could consider also onboarding your need to raise funds. Yeah.
Thank you. Well, welcome more questions, but in this era of fake news, Umar, where can we get the trusted sources of information about Islamic finance?
Well, there are very reputable sources that you can find online. Our blog also would write some articles about Islamic finance that's lighter for the mass public. And then I guess the more relevant ones for the crowd that we have, or that I think we have today, would be like Islamic Finance News. They are a very good portal. They have IFN Fintech, and IFN, the general platform. There's also Salam Gateway, which is more of a news portal, news platform. This formerly was part of Thomson Reuters, and then now Refinitiv. Yeah. So these are two of the more popular or more common platforms or media sources. Yeah. If you want to go deeper into more research type articles, in Malaysia, ISRA, which is our Sharia advisor, they have a platform called iFikir. I don't know whether you remember this, but yeah, you can search for ISRA, ISRA.
Okay, thank you.
Welcome.
Yep, we'll take note of that for sure. Okay, I think that's it. We don't have any more questions coming in from the audience, but I'm sure many members of the audience have learned a lot. Probably have questions, but maybe some are too shy to ask. Thank you for your time today, Umar. Oh, sorry. I'm told
the Q&A.
Oh, there are some questions. Sorry, yes,
yeah,
I missed that. Yeah. Oh, I see. Yeah. Sorry, my bad. Okay, let's see this. Let's start with this one. Yeah. Sure. How is Ethis a real estate crowdfunding platform different from conventional real estate crowdfunding platforms?
Sure. So this is our Indonesian platform. We have been focused on real estate development crowdfunding for the past 6 years. Although right now we are also we have started funding SME, supply chain finance, and other things. Yeah. So I guess two key components of what makes us unique is that we focus mainly although not exclusively, on social housing development projects. So you invest in developing housing as an impact investment, because that investment will then provide homes for low-income families. And there's a lot of documentation and our own empirical evidence that this really helps them to break out of the poverty cycle over time. Yeah, because you have a roof over your head, you have an asset, you have stability, and so on. It really makes a huge difference to those families trying to break out of a difficult cycle of living in poverty or very low income. Yeah, so that's the first thing. And the second thing is what we do a lot in Indonesia is we actually work with the stakeholders, which is the property development organizations, the banks, the Islamic banks specifically, and also the government, because this category of households that need homes, and in Indonesia there's a shortage of more than 10 million houses, tend to be mainly Muslims. Of course, Indonesia is Muslim majority. So they also would prefer and would want Islamic financing. And so we also are able to get access to certain projects that are very community focused. And the good thing about it being part of a community, let's say a religious community, right? This popular preacher has a lot of followers, and they want to build an estate for their followers or with their followers. So that makes sales very easy, because there's a ready market of people waiting to live there, to buy the houses. Yeah. So those are maybe a few things I can highlight.
Okay. I want to bring up a question from Akib Al-Fadak. A very good question, I think. I would like to ask regarding the NGO that raised funds for charity, right? I guess it's a global sadaqah. What's the percentage of collection that can be used for management to support the management?
Sorry, where is it? Yeah, used for the management. I'm not sure whether he means our fee or management for the charity. Yeah. So basically, for us, maybe I'll answer both then. So when an NGO comes to our platform to raise funds, and for Global Sedekah, we only work with registered charities and NGOs and social enterprises. Then you need to have a basic level of transparency in the utilization of the funds. Yeah. So as part of that, if there are management fees or administrative fees that are high or out of the ordinary, then we would question that before we onboard that campaign. Yeah. And on our side, we charge a fee. So it depends a lot on the project owner. We charge from as low as 3% to as high as 15%, depending on the services that we offer. So for example, the 15% that we are charging, this is a specific type of campaign that we are about to launch, which is a zero interest financing campaign. Yeah. So here, the implementation partner will require quite a bit of cost, will incur quite a bit of cost in implementing microfinance programs. And so that 15% covers our cost as the platform and also the implementation program cost. Yeah. So it really depends on the type of campaign and the campaign owner and the services that they require from our platform.
Speaking of microfinance, there's a question from the audience, right? Regarding how Islamic banks seem to be more focused on big investors and investments and are not looking much into microfinance. And this question asker sees a disconnect between the essence of Islamic economics and values and values-based finance, right? And would you like to comment on that?
Sure. So this also goes back to something I mentioned earlier, which is that the shortcoming or the, in a sense, failure of Islamic finance is not being able to impact the masses the way it should. And you point out, a few factors where it's more focused on the bigger investors, corporates, and so on. And I would say that in general, yeah, to generalize is quite true. So I do see that disconnect as well, and that's where we are trying to fill that gap. And there's increasingly more and more fintechs and even Islamic finance institutions coming on board for that. So it is a work in progress. The disconnect is still there, but there are solutions that are trying to bridge this disconnect so that true Islamic finance can go out and impact the masses in a participatory way, essentially. Yeah.
Okay. Another question from the audience. Do you see potential for Islamic finance to rise in non-Muslim countries?
Yes. So maybe we can give the example of the UK. So the UK is considered the Islamic finance hub of the West. Yeah, by and large, they lead in almost everything. So and this has happened a lot to do with the support of the government and the regulators. Even recently, I think in the past few days, they amended some laws for more of the wholesale banking side to facilitate or to allow Islamic banks to play on a level playing field with other banks. Yeah, so I think there's a lot of potential in a country like the UK. They are already there, and they have still a lot of room that they can potentially grow. In Singapore and other financial centers, I think there's potential as well, but this is serving the bigger Islamic investors. So I think that's a bit different. But one thing that on the other extreme, I think microfinance implemented through Islamic models can also work. So it need not be a Muslim country or Muslim majority country that's implementing this approach. It can be any country. Yeah. So in a non-Muslim country or non-Muslim dominated country, this kind of models could potentially work as well. I want to quickly just bring your attention to an organization called Akhwat in Pakistan, where they give zero interest financing for the past 15-20 years. The default rate is, I believe, small single digit. I forgot the figure, and they have disbursed about close to $1 billion successfully, like $100, $50. Similarly, in Malaysia, in Indonesia, there's an organization called BMT. It's a group of 200 organizations, and they've also provided funds of close to $1 billion as microfinancing, commercial microfinancing, Islamic commercial microfinancing. So these are solutions that are not common and can be replicated in non-Muslim countries as well.
Thank you. So another question that we have here, I think is quite interesting. Can technology be non-Islamic? So I guess like you mentioned, it's like food, right? There's halal, non-halal food. Is that technology that's non-halal?
Sure. So I guess technology is the platform, right? The means to the product itself, right? So in general, I would say technology in itself is agnostic. It cannot be non-Islamic, right? Because by its nature, it's a tool or a platform, right? It's just like, let's say you can use a table to put halal food and non-halal food, but the table cannot be halal or non-halal, right? So maybe there's an analogy that I can give to try to simplify this question.
Yeah, I love that analogy. One slightly more technical question from Manal Osman. What's the difference between Mudarabah, Musyarakah equity financing crowdfunding and the conventional equity crowdfunding? What's the ethical components difference between them?
Okay, so thanks for the question. For the benefit of those who are not familiar with these terms, Mudarabah and Musyarakah essentially is profit and loss sharing, right? Different forms of profit and loss sharing. And equity crowdfunding, it's basically also profit and loss sharing. You buy shares, you become an owner, shares are issued to you, and you have rights to whatever profits made or losses incurred. So fundamentally, I would say they are the same. Yeah, the question is, what's the difference? So I think what's the difference is there are certain technical considerations that need to be looked at. For example, for equity crowdfunding or equity financing, for example, there's the preference share model, right, where investors have some groups of investors or classes of investors have preferential treatment, typically in the form of coupons and so on, or even liquidity preference, exit preference, and options and all these things. So in the Musyarakah and Mudarabah approach, and very quickly, I have to give a disclaimer, I'm not a Sharia scholar. We do have Sharia scholars working with us, and this is what I understand from them. So from a Musyarakah and Mudarabah model, these elements need to be properly looked at to make sure that they're not unfair to the other shareholders. Right? Essentially, shareholders should have the same rights. And if there's the element of a coupon, then that rate or whatever is paid from the coupon side needs to also adhere to the other principles of Islamic finance, which is it cannot just be straight out, an interest coupon, a fixed amount that is paid to you no matter what happens. Yeah. So if there is that component, it needs to be tied to some kind of business performance as well. Yep. So I hopefully what's the ethical component difference? I think for conventional equity crowdfunding, it can definitely, and I guess it is ethical most of the time, but you would have platforms that go into industries and sectors that may not, be accepted as ethical. Yeah.
Okay. Would you also maybe like to give an example of a successful crowdfunding for wakaf?
Wakaf.
Is that how you pronounce it?
Yeah, I think you have a knack for Arab words. So wakaf,
Okay.
yeah, wakaf is endowment, as I mentioned just now. So I think there have been some cases or examples of success, not too many, but more and more coming up. Yeah, on our own platform in Global Sedekah, we have funded a number of wakafs, and I think this is something, especially for Muslims who are familiar with the concept, it is quite liberating, because historically the concept of wakaf, and traditionally even till today, is tied to giving land. How many people have the opportunity to give land, right, or the money to buy land? So for most of the Muslim masses, this idea of wakaf is something that is unattainable for them, right? And just to add a bit more perspective, why it's special for us, for Muslims, is that when you give this endowment as a wakaf, essentially it is pledged to God. It's pledged to the people. It's pledged to a specific benefit, and this is what will endure and continue after you die, like giving you, your rewards even after you go, like as if you're doing good deeds when you're no longer around. So that's why it becomes so special. And in many communities, you have a big mosque or community center, or sometimes a cemetery, and you can see that this wakaf is given by this person like 200 years ago. And for a normal Muslim, you may not be able to access that. You may never be able to make a wakaf. So with crowdfunding, you can do a wakaf with $1 online in 5 minutes. So that's very liberating for Muslims. And I think there's a lot of interest to do wakaf online right now through crowdfunding as well. You can check it out on Global Sedekah. We typically have a wakaf project. We have a big cash wakaf project coming up, where the endowment is in cash, and the cash is then invested in Shariah-compliant investments to create impact, and the returns go to charity or to a beneficiary. So that's the cash wakaf model.
Okay, thank you. I want to take this question from Mike Chan, but maybe I'll just rephrase it a little bit to be more general, right? So Mike is asking, I think, what's the return rate, right? And I think maybe let's have a more general question, which is, typically when you raise funds on the Ethis platform, what are some of the return rates that investors can expect?
Sure. So we have in Malaysia the equity crowdfunding platform, and in Indonesia the lending or P2P platform. So the rate will apply more to the P2P platform in Indonesia, and it depends on the project type. So for short-term financing deals, supply chain financing, trading deals, it can go quite high when you annualize it, right? So over, let's say, 4, 5, or 6 months typically, you have a rate tagged to business or trading that equates to, for a 6 months project, typically 8 to 9%. Yeah, but this varies. It can be lower, it can be higher. It depends on the negotiation with the issuer, and also the risk of the deal. Recently, we had one very big urgent deal that was funded in a few hours. It was a 1.5 million Sing dollar, big for our typical ticket, and that gave about 12% in 2 months. So obviously that's very high. That's why the investors came in very quickly. Yeah, but typically our deals would not go that high. That's an anomaly, because it was an urgent request, and we had to commit to a certain timeline to be able to get the deal. Outside of that, for property projects, typically it's more than 1 year, up to 2 years. And if you annualize, it works out to 10 to 12, sometimes 13% returns for you. In Malaysia, we focus on not only startups, which is typically more common for equity crowdfunding platforms. We focus also on agriculture and fast growth SMEs and social enterprises. So this is where there's, we feel good upside in the long run. The more resilient sectors, they are also on the upswing because of the COVID situation. Yep. So for that, there's no rate per se, but the potential upside is typically quite high. Although for all of this, definitely the disclaimer we always have to make is that the risk is always going to be high for any kind of deals, or any kind of projects or companies on alternative investment platforms like Ethis.
I want to rephrase this question from Maxwell Gendron Arnoldo. Apologies if I mispronounce your name. In terms of the kind of projects that Ethis Malaysia has, right? Will you have more? Will you have projects that have more certain exits, similar to the ones in Indonesia?
Sure. I think Maxwell had two questions. Maybe I'll answer both. Yeah.
Sure.
So it may have right now, not yet. So-called more certain exit or arranged exit, where we are working on some redemption type exit, yeah, so that your shares are then sold to the business owner. So typically not, but we are potentially coming up with that, yeah, a more defined exit kind of equity crowdfunding. But yeah, it is not the typical deal that we'll do. Yeah. And secondly, the question is about the santan deal. So for those who are not familiar, I mean, santan is an ingredient, but in this case, it's actually an F&B franchise. If you have flown on AirAsia, their in-flight food is branded santan, and they've opened up 3 F&B restaurants in Malaysia called Santan, and they're doing very, very well. They're focused on delivery, and AirAsia is franchising that concept. And so we are doing equity crowdfunding, to co-fund franchises. So yeah, there's the Santan deal. We're very excited about it. AirAsia is a strong brand, and they're building their super app, and all of this will link back, and go back to the value of what the group has. So to take up the whole Santan franchise may not be your cup of tea, but to invest and own shares in that franchise may be interesting for a lot of investors.
I'm just going to end off with one question about Ethis itself. So what are Ethis's plans for growth beyond crowdfunding? And are there any other financial assets instruments that Ethis plans to introduce to investors and business owners?
All right, thank you for that question. This gives me an opportunity to share our vision and our mission. So what we want to do, our vision and our mission is basically to circulate funds in an impactful and sustainable manner, right? And in doing so, uplift humanity. That's our vision. So what products are required to do that? The most basic one, which is what we have right now and we are working on right now, is crowdfunding, because that channels funds to projects, funds to companies, funds to issuers. Yeah. So crowdfunding is our core. Now, but as we progress and as we grow, how do we augment this and enhance this ecosystem that we're building? Of course, through partnerships and collaborations. But internally, we are also looking at more technology assets within the group and more financial assets to offer to investors as well. Yeah. So this is still in the works. Yeah, but I think across the board for most forward-thinking crowdfunding platforms, there's the concept of tokenization or investing in tokenized securities. Yeah, so that makes it nimbler, faster, cheaper, and more tradable, and so on. So we are looking at that, and that's something very, very interesting as well. It's a game changer, I believe. We're also looking at how we can add gold to the equation, to bring some stability and also to introduce a new asset class. So these are the two things maybe I can indicate that we intend to do at some point in time.
Yeah. And you and I are probably going to have a chat about those as well next week.
Sure.
All right, thank you, Umar. I think this has been, hands down, I would say this has been the most enjoyable for me webinar that I've hosted. Makes me really just want to go out there and read all the articles that you mentioned, all the websites you mentioned. And I've got the link actually you posted. I've got that open. Really excited to learn more. Thank you for sharing about Ethis and about Islamic finance and about ethical financing on the whole. We look forward to maybe hosting you again in another session on this. And I'd like to also thank the audience for being here with us today. Thank you, everyone.
Thank you. Thank you so much, Victor and everyone.